The small cap index is starting about 1/3% higher, and you got the mid cap index, which is up 0.5%. So this is a much better start as compared to, of course, what we saw last week, and generally the trend that we've seen now for some time. Just the Nifty heat map in terms of how many stocks are up and down. So it's largely, 7-8 names are lower, but everything else is starting in the green. There is IT, which I can spot a bunch of names there. On the other end of the sort of spectrum is Tata Consumer, which is starting lower, but it's largely up and about this morning. 78, 80 points nearly on the Nifty. Surbhi.
Okay, it's quiet and quiet, but with a positive bias, so it's not bad. Getting an 80-point pop. Movers on the upside. Infosys, IndusInd Bank, there's Trent, which is seeing some traction. Bajaj Auto, Power Grid, these are the stocks. So they're basically cutting across sectoral lines. But yes, IT is actually doing a little better. And remember CLSA's note, where they see perhaps higher levels ahead of some of these stocks. They're all up and about. Tech Mahindra as well, Wipro, there's some green on overall IT. L&T is continuing its good form from Friday. There's buying in Eternal in Trend, so some consumer names as well. On the flip side, on the Nifty, you have Reliance, which is still a drag, and Balaji explained to us why. That this Jio, if the IPO happens without a demerger, then there could be a risk of a holding company discount on Reliance increasing. And therefore, that's putting pressure on the stock. Tata Consumer, HUL are some of the other weak names. But beyond that, it's a green-looking screen for the Nifty. So not too bad, 24,500.
Well, that's right. The big mover actually today has to be Torrent Power. They have won that LOA for a 1,600 megawatt thermal plant in MP. A couple of brokerages believe the plant can generate 15 to 17% IRRs. So that's why that stock, in fact, is up close to 3.5%. The loser on the downside actually is Sterlite Technologies, because the US subsidiary is facing a penalty that amounts to $96.5 million. So because of that, I think that's one of the big losers from the broader markets. The stock is much lower. Last time I checked, yes, it's still down close to around 5%. So big downtick is what we're seeing on that particular name. What else? A few more stocks actually that are coming on your radar. You have some strength that we're seeing in Godavari Power and Ispat. Stock is up close to around 4.5%. Samvardhana Motherson, that's up close to 2.5%. BSE, the stock has fallen one way from around 3,000 to around 2,000. Today, in fact, it's popping up close to around 2% in trade. So decent start, 80 points higher. Remember, we're looking at making a higher high from a bullish perspective. So that 24,572 mark becomes the important mark to track on the upside. But 100 points up, pretty good.
Yeah,
absolutely.
Just adding one more stock to Nigel's list, Zydus Wellness. The market is receiving that UK acquisition pretty well. Stock's up 3.5%. This company called Comfort Click that they've bought it for about 240 million, which is just a little under 2 times sales. The market seems to like it, for the time being at least.
Okay, well, lots happening, lots moving, and we will, of course, get you more as we go along in terms of individual names, etc. Well, I think for investors, there's a marquee conference which kicks off from today, which is the Motilal Oswal Annual Investor Conference, which is underway. We, of course, got you a preview of what the lineup is last Friday. But let's sort of get into it. Ramdev Agarwal is chairman and co-founder at Motilal Oswal Financial Services. Ramdevji, good morning. Great to have you with us here once again. Last we saw you was with the beautiful Kenyan background. And this is a nice background as well. Hustle, bustle, early morning, conference vibes.
This is completely changed. I'm really enjoying to be back from Kenya and straight into the conference. Thousands of participants, hundreds of companies, thousands and thousands of meetings. I think this next 3 days are going to be quite intense, and also it will set the tone for me to figure out now that wherever tariff and all things are. So what's really happening in the real economy, how the companies are taking it, and how hopeful they are about the so-called avalanche of reforms which the government is promising. So I think there is a lot on the agenda, and days are ahead.
Yeah, from lions and cheetahs and giraffes, different kind of crowd, right? But all looking for ideas in terms of different kind of food, stocks as food. Now, but there's so much, right, on the table. The only thing is, what do you really... It's so many moving parts. There's always moving parts, but I guess this time especially more so. But would you imagine the crux at the end of the day for investors, the bottom line is going to be to find which are the companies where there is a little bit of predictability and sustenance of earnings growth, decent earnings growth in these volatile times. Do you think that's going to be the ultimate aim at the conference?
Yeah, I think Buffett or somebody said, uncertainty is the best friend of the long-term investor. Okay, so right now we are in the midst of uncertainty, and now you need a very clear thinking about how to invest. I mean, in investment candidates, what all you are looking for. And this uncertainty leads to a lot of mispricing of very good stocks because there could be some very short-term challenge of 2-3 months, 4 months. People might come and dump it, and you might be able to get it at 30, 40, 50% cheaper. So what is important at this juncture is to really have a deep thinking and have a very clear strategy, what kind of stocks you like and are they available now at your prices, So it is quite possible those companies are available at a depressed prices. So this is a great time for the investors. I don't know how good it is for the traders, but definitely a great time for investors for stock picking.
Oh, absolutely. Investors can at least apply their mind. Stock prices aren't running away to, stratospheric heights. So perhaps it's easier to pick good businesses right now. Thanks for joining in, sir. My question to you is more on one of these big ticket reforms that's almost happening. I mean, the meeting is this week, the GST Council meeting. And it's pretty landmark. I mean, what they're talking about, a lot of items moving to 5%, many moving from 28% to 18%. The market's reaction to it after the initial pop, I mean, after 15th August speech, we had that initial pop, and then the market went a little thanda. So do you think it will eventually start leading to a bigger move around the festive season when the cuts really kick in? Or is the market concerned about something else? And, there's a GST meeting and then there is a GDP number, which was also very, very good, even if you remove the technicalities aside.
Yeah.
But again, market is a bit thanda. Well, why so?
Yeah, I think it is that this tariff issue is all over. I mean, if you see even the PM's visit, everything is colored. I mean, this visit is also colored with the tariff issue with the America and all. So I think there is too much of right now noise, not so much intelligent argument, but there is a lot of noise about this issue, and everything is clouded by one particular issue. And it's not that this is final forever. There is going to be negotiation, there is going to be a deal, and maybe in next 10, 15 days, 1 month, there is going to be a deal between India and America. We are long-standing partners. There will be a deal. What will be the deal? I don't know, but it will be far better than what it is right now. So uncertainty will get cleared at some point of time. So a lot of things are going to happen, but right now that looks to be overriding. It's the nature of the market. They need one headline, and for 10-15 days they will talk about it, and after that they'll move on to the next one. And whatever happens in the first one, nobody is bothered. So I think as the GST thing comes closer and actually people come to know that 28 is abolished and it has come down to 18%. So you look at some auto companies, particularly where the demand is very sensitive to the price cuts, say like motorcycles particularly. Say if it comes down from 28 to 18, I mean, you could see massive surge in the demand. But since it has not happened, it is very difficult to figure out whether it will be 20%, 30% jump, or will it be just a muted kind of situation. My sense is if it is honestly implemented from 28 to 18 for motorcycle companies or entry-level car companies, I think automotive will be one of the segments to watch out for in next 1 year. But since it is not done, nobody believes these kind of reforms can happen. I think markets are skeptical, and then on top of it, this tariff thing is also playing out.
Hi Ramdevji, good morning, good to see you. And the problem with regard to this Trump's tariff tantrum is that it's become a reality. So that's an issue, right? Because it's hurting sentiment. And I think that will be the single biggest trigger just in the near term to help those animal spirits to come back. But if we don't get clarity, say in the next month and a half or so or thereabout, it'll continue to weigh on the markets, right? Difficult to move up when you have only 10% earnings growth, you have this tariff issue and uncertainty. What is your take, sir?
Yeah, Nigel, it is not about one thing. There is you always get a package deal in the economy. You always get a package deal. You have the GST coming in. You have the government has so many powers of non-financial reforms also. I mean, there can be things on education, there can be things on tourism, there can be things on judiciary, on a home front. I mean, see, it's not everything is linked to just tariff and kind of GST and things like that. So I mean, let's see when the PM comes back in next week from all his tours, what kind of energy he brings in and what kind of avalanche of reforms they unleash. So I would remain a lot more optimistic about how things are going to shape up, even for earnings. You see, just yesterday, all the economies, they are wrong by 1.1% for a quarter. I mean, the GDP grew at 7.6%, where the expected was about 6.5. I mean, consensus was 6.5. Even your biggest of the bank economies, they were at 6.5. And here comes a number which is 7.6. So I think we don't know everything. And this momentum is big. This 7.6 has come without full flow of the credit, without full flow of the fiscal concessions, without full flow of the rate cuts, and now the promises of GST cuts and all. So there are a lot of emanations to counter. If there is anything, of course, 50% tariff, if it becomes long term, it is going to hurt the trade. But the trade itself will find its way, and I think the economy is just not slave to just this tariff. So I think we have to be much more calibrated, and it's a good time that market was a little overpriced. Global markets have run up big time, so we have underperformed in the current year. So now the corrected market, or I would say steady market here, thanks to the massive flow we have, domestic flow, is holding it here, and it is an opportunity for the long-term buyer to look at some of the opportunities.
Mr. Agrawal, just a question, sir. Is the market currently underpricing the positives that we've seen in the last 2-3 weeks? GST cuts, GDP, build up ahead of festive season. Is the market underpricing it because it's in a bit of a negative sentiment state of mind? Or is it right in the wait and watch approach?
No. Surabhi, you just see the pace at which the foreigners are selling for whatever reason, and domestics are countering that. So if it was not for the domestic flow, you imagine what would have been shape of the market. I mean, if you sell $1 billion in a day, cash, what would the shape of the market? Market cannot absorb that. But just that we have a much bigger flow from domestic. I think last month was a record. In August, DI itself has bought almost 1 lakh crore. I mean, at least that is what the SEBI number is saying, that 96,000 crores have been bought. It's a record in itself that in 1 month we have bought a lakh crore cash. So I think we must not undermine. The biggest force, I would say, are two things. There are two biggest forces. One, the sustained flow of domestic flow and participation. The GDP is rising, and that's my main presentation today. India, the multi-trillion-dollar opportunity. So if you go through the presentation, the GDP is growing, savings are growing, and on top of it, participation is growing. So this combination of both is just explosive in terms of demand for the paper in the economy. Now, just because there is a demand for paper, stock markets are not going to go up. It is going to go up when the economy does well and when the earnings start climbing, which is what we expect in the second half of the year, or particularly the next year. I think we are going to see bumper increase in the earnings by maybe 15, 17, 18%, depending on the slew of reforms which is implemented.
I was just thinking, Ramdevji, I remember when a year and a half back, the situation was exactly the opposite. Local flows were very strong and FIs were also buying. And then I remember somebody, I don't know who it was, said, well, if this continues, there will be, prices will go berserk. I mean, they won't make any sense. Because mutual funds will get money, they'll have to buy. You can't sit on the cash. So you need supply, supply of paper. So it's always, a bit of this, a bit of that, right? Depending on where you are at. So a couple of questions, Ramdevji. One, just to go back to the conference, what are you, apart from your own presentation, who are you most excited to listen to? Just give us 2-3 names or 2-3 sort of, things at the conference.
So that way, it's a full, it is designed always. The organizer, they sit with me and they ask me, quiz me, which are the sectors or what kind of themes you would like to see. So, one of the things I was telling them was about AI. So there is somebody who is presented from McKinsey about the AI actual impact. How much is hype and how much is the real impact? That's what, because AI is continuously evolving so rapidly, trillions of dollars being spent, and we have no idea from where the earnings are going to come. So is it a hollow hype, like what happened when the internet came first in 2000, and then it leads to a complete collapse? Or is it earnings supported? It is going to have a huge impact immediately on the earnings of the corporates globally also. And hence that trillions of dollar investment is good. So that's one theme. Second is about the real estate. So I think Abhishek Lodha is presenting on that. We are talking about quick commerce. I think Adit Palicha is this thing. So like that, every single slot has been, even, and I think one of the most coveted participants would be our Commerce Minister, Mr. Piyush Goyal. So I think, so there is all this, I think 16 or 17 CEO tracks have been very, very well curated to represent one issue or other, which is there on the top of the mind of all the investors.
Ramdevji, I think Prime Minister Modi is speaking right now. Stay with us. We're just going to cut across to it and come back.
एसईओ को लेकर भारत की सोच और नीति 3 मुख्य स्तंभों पर आधारित है। एससीओ, एस सिक्योरिटी, सी कनेक्टिविटी, ओ अपॉर्चुनिटी। पहले स्तंभ एस यानी सिक्योरिटी के संदर्भ में मैं कहना चाहता हूं कि सुरक्षा, शांति और स्थिरता किसी भी देश के विकास का आधार है। किंतु इस मार्ग में आतंकवाद, अलगाववाद और अतिवाद बड़ी चुनौतियां हैं। आतंकवाद सिर्फ किसी देश की सुरक्षा ही नहीं, बल्कि पूरी मानवता के लिए एक साझा चुनौती है। कोई देश, कोई समाज, कोई नागरिक अपने आप को इससे सुरक्षित नहीं समझ सकता। इसलिए आतंकवाद से लड़ाई में भारत ने एकजुटता पर बल दिया। इसमें एससीओ रेट्स की बहुत महत्वपूर्ण भूमिका रही। इस वर्ष भारत ने जॉइंट इंफॉर्मेशन ऑपरेशन को लीड करते हुए अल-कायदा और इससे जुड़े आतंकी संगठनों से लड़ने का इनिशिएटिव किया। हमने रेडिकलाइजेशन के विरुद्ध समन्वय बढ़ाने और मिलकर कदम उठाने का भी प्रस्ताव रखा। टेरर फाइनेंसिंग के खिलाफ आवाज उठाई। इसमें मेरे समर्थन के लिए मैं आभार व्यक्त करता हूं। एक्सेलेंसी, भारत पिछले 4 दशकों से निर्मम आतंकवाद का दंश झेल रहा। कितनी ही माताओं ने अपने बच्चे खोए और कितने बच्चे अनाथ हो गए। हाल ही में हमने पहलगाम में टेररिज्म का बहुत ही घिनौना रूप देखा। इस दुख की घड़ी में जो मित्र देश हमारे साथ खड़े रहे, मैं उनका आभार व्यक्त करता हूं। यह हमला केवल भारत की अंतरात्मा पर भी आघात नहीं, यह मानवता में विश्वास रखने वाले हर देश, हर व्यक्ति को खुली चुनौती थी। ऐसे में प्रश्न उठना स्वाभाविक है, क्या कुछ देशों द्वारा
Okay, that's Prime Minister Modi. Important comments coming in from, of course, he's in China and is due to fly back today. We'll, of course, have it on the side of the screen and continue to put out the flashes in terms of what he's saying. Ramdevji is with us. Ramdevji, those comments coming in from the Prime Minister. Two questions. I mean, you outlined the themes and the speaker track list. What you started with AI. So I just have two questions. One, is there a AI play in India? And this is a piece I did some time back. Most large markets have, and this is where global interest is at an all-time high, right? Maybe it's a bubble or not. We don't know. We'll see. But some of actually, it's just food for thought. Lack of AI plays perhaps also reason for foreigners' lack of interest, enthusiasm. That is one. And second, you began by saying that this is the time to be opportunistic. So is there a watch list for you, and what's on that watch list? Go on.
Yeah. So clearly, I'll tell you one thing. AI or no AI, of course, you need some iconic things to happen in the market for the attention to be drawn for these foreigners. But actually, the sustained high earnings growth rate of about 12-13%, that's sufficient. Whether it comes from even oil companies, whether it comes from steel companies, whether it comes from retail companies, consumer companies, the issue is that we have had a slowdown in the earnings. And the reasons could be many. It could be a slowdown in the credit flow. It could be inflation. It could be high interest rates. I mean, there could be multiple things. It is for me. I'm not a macro guy to figure out why it happened, but definitely there was a slowdown in the earnings in the last 2 years. Once the earnings growth picks up to say 12, 13%, 14%, I think your P multiple, aggregate P multiple, which is at about 22, that will start coming down, and that will make it. And good thing is that rest of the emerging markets, they are on the boil, and particularly China. So I think the gap between China and India P multiples, which is at about 16 and 22 right now, if that goes down a little more, say we stay 22 or 20, and they come up to 18 or so, I think there will be natural flow of the money into the market from foreigners also. So let's not bother about whether there is an AI play or not. And maybe right now, AI plays, pure AI plays in India would be in more of a private equity space, unlisted, very small. They are trying out. If you see today's paper, there are a lot of AI startups which have been encouraged by the government, and awards have been given. So I think we will find our way.
We'll wait for them. We'll wait for them. We'll wait for them.
You have to wait for them. Yeah.
Yeah. And watch list, Ramdevji.
Yeah. So I'm looking for, since I don't invest directly, my asset management company, the fund managers, they are looking for the ideas. And the theme of the asset management company at our end is high quality, high growth. So within QGLP framework, they are looking for high quality, high growth companies. And because the moment high quality, high growth comes together, market tends to misprice them. It looks 30p, 40p, but then if the company is growing at 50-60%, I think there is always a potential for them to rise in terms of prices and beat the markets. So I think index composition, if you see, is slowly changing. In next 10-15 years, you will see a lot of internet-based companies which are growing at very rapid pace of 50-60%. They will come, despite the fact that they may not be earning today much, but their market caps are high, and they would become prominent contributor to the market caps in the indices, and eventually also very high quality earnings to the index. So I think Indian indices, Indian market is also undergoing change in the changing landscape of the kind of corporates which are going to make money.
Absolutely. Finally, sir, like you've taught us and like how we've learned, there are only two things you need for a bull market. One is strong earnings and the other is obviously strong liquidity, right? So on the latter, I'm just curious that in the conference over the next 2 days, what's the mix of investors like? Is it largely local? And in local, what kind? Is it family offices? Are you anticipating to see some foreign clients as well? What are you expecting from the mix of the investor base? And the questions that they'll probably have, also for the companies.
Yeah, so actually it is a very good mix of FIIs. A very large contingents of FIIs are coming from Hong Kong, Singapore, London, from these places. And then on top of it, you have now actually importance of domestic mutual fund is paramount. Our own mutual funds are now, we are talking about 3 lakh crores, 5 lakh crores, 7 lakh crores of equity. So these are the real gods of Indian equities. So we have, I mean, of course, they'll be fully represented here. And there are hundreds of companies we are coming between 3 days. So they'll all come at different point of time. But I would say the most important segment is the domestic mutual funds, insurance companies, so DII so-called, and then of course good mix of FIs. They are trying to see what kind of mood is here.
Sure.
And we are getting guys from Taiwan and Korea and some far-flung places I have never even visited. So, yes, there's a lot of interest from a foreigners. Yeah, but allocations are small compared to what DI can do.
So we're looking forward to the next interview, which will probably happen from these far-flung places in the Far East, right? We'll have another beautiful backdrop with Ramdev ji and more insights as always.
Yeah.
Thank you. Thank you so much, sir, and good luck for the conference.
Yeah.
And we'll of course catch you there over the course of the next 2 days. All right, well, with that, let's turn the spotlight on the big headline that came in on Friday evening. It was a very positive headline. GDP numbers for the first quarter coming in at a much higher than expected. The number finally that came through was 7.8%. Most estimates were ranging between 6.5% to about 6.8%. So to talk about this and to figure out how to understand and interpret this big number, we have with us Pranjal Bhandari, Chief India Economist at HSBC, and Sameer Narang, Head Economics Research Group at ICICI Bank. Pranjal and Sameer, thank you so much for joining in. So, we were just speaking to Lata about this, and we understand that, yes, there was a deflator issue at play because inflation is so low, whether you're looking at CPI or WPI, so therefore the deflator is low, so the number optically looks higher. But my point is, I think everybody knew this, right? And economists would have baked this into the estimates, and yet the beat is almost a 1% beat. 100 basis points beat above most of the consensus estimates. So, Pranjal, let's open with you. I mean, X of the technical implication, what is your assessment, or what does this number tell us in terms of the actual growth and buoyancy in the economy?
Yeah, thank you very much. So look, our forecast was just north of 7%, but not as high as 7.8%. There is a deflator issue out there, and we have tried to quantify it. I think it has overstated both industry and services. Our senses by about 1 percentage points. So if we shave that off, our senses real GDP growth number is closer to 6.8% and not 7.8% that was announced. And even this 6.8% number, is a strong number. India's potential growth, its ability to grow is about 6.5%. So if you have a number which is higher than that, that's actually a good number. And there were a few good things that happened in the quarter. I think consumption was strong, both government and private sector. The government, both center and state, have front-loaded some of the expenditure. And when I look at consumers, I'm finding that there has been some increase in the informal sector. Look, at the end of the day, with oil prices falling, inflation falling, purchasing power rising, rains being good, my sense is that the rural India and the informal part of urban India have actually been beneficiaries. And I think that did show up in the number. So I think it's safe to say right now that on the eve of the 50% tariff, actually India's growth was pretty decent, close to about 6.8% when we take off the deflator boost.
Got that. Pranjal, good morning. Sameer, good morning. Sameer, your first thoughts in terms of what you made of the numbers and what have you done to your own estimates post this beat?
So I think, I agree with Pranjal. Deflator had a role to play. Also, the fact that, both center and states have front-loaded their capex by quite a bit. So if you put them both together, both center and states in aggregate spent around 3.8 lakh crores in the quarter, and nominal GDP is around 87 lakh crores. So, a number in excess of 40% there implies almost a 2 percentage point boost to growth just because of front-loaded government capex. Over the next few quarters, this boost will not be there because for the year, the government is likely to spend around 10% on capex in the year. So in the subsequent quarters, you're likely to see much lower government capex, and that is likely to impinge on growth, along with the lower exports, which have been weak in general, apart from exports to the US. So in aggregate, what we have done to our estimates, given this macro backdrop, is that we revised our estimate to 6.6% from 6.3% earlier. For the next 3 quarters, growth will be 6.5 or thereabouts, or 6.7 in Q2. But then it averages around 6% in H2. So for the year, number is around 6.6. Not a bad number given the global backdrop.
Pranjul, what does this do to rate cuts? I mean, a second rate cut in October, chances of that?
Look, my sense is that RBI is going to continue to cut at this point of time, given the growth drag that comes from the 50% tariff. But it may not happen as soon as October. I myself have it penciled in for December. And the reason is that by the time we have the October policy meeting, we won't get a lot of the slowdown data. Most of the slowdown is going to happen in September, and the data will start trickling in from the middle of October. So on the 1st of October, when the RBI meets, it may not actually have all the data available to claim that this is a growth slowdown and they're going to be cutting rates. So I think we'll have to wait for a little longer. And I think that is what, in a way, the bond market is fearing at this point of time. The fact that, there is no easing, which is in the horizon very soon.
All right, got that, Pranjal. Samir, coming across to you, what are your expectations with regard to the RBI? We are thumping the table. Yes, the Q1 print was good, but then it doesn't give us, from an equity market perspective, maybe that rate cut that people were sniffing may not come about. How do you expect the RBI to move going ahead?
No, I think, Nigel, I agree. Our view is that we don't expect a rate cut in this financial year anymore. Basis what is happening on the growth front, number one, in Q1. And in H2, though we expect growth to slow down, but it's largely driven by exports. Domestic economy, because of the GST rationalization and the proposed cut, will see a big rebound in consumption, particularly from September 22nd onwards, when the new rates will be applicable and the Navratras start. So we believe a bumper Diwali ahead, and that would make sure that RBI holds back on the growth front, because domestic economy should be doing well. And on the second part is that we do expect inflation also to pick up. Our numbers are pretty much in line with the RBI's at 4.5% for March quarter and 5% for the next year, Q1. So overall, we expect inflation around 4.7%, but with GST rejig, it could be 20 basis points lower than that. So 4.5% is where we see next year's inflation. On back of that, we do not see RBI cutting rates in this financial year.
All right, Samir, what about the second quarter? If I look at the trends, whether I look at the movement of cement via rail or the auto sales as well, that's likely to take a temporary hit, because of wait for clarity on the GST rates. So that's when the near term we'll like to see some kind of pausing in terms of purchases. So Q2, do you think will be an absolute washout?
No, Nigel, we don't think so, because July has been a good month. Manufacturing growth is around 5.4% that the number came in. August also should be okay, because the impact of the tariffs will be felt in September. And by end September, we expect the domestic economy to be humming by 22nd of September. So maybe 3 to 4 weeks, there could be somewhat of a lull. But I think there will be an inventory stocking ahead of the festive season, when demand should be much more than normal because of the GST rejig. So overall, we believe for the quarter, we should be around 6.5%, if not more. And the deflator will play a bigger role even in the next quarter, when WPI is actually running negative right now.
Okay. And Samir, you said for the full year, FY26, you're at 6.6% GDP growth estimate, right?
Yes.
Okay. Pranjal, same question to you. I mean, your growth expectations for the full year, how do the final numbers now stack up? And what are your expectations from festive season? Clearly, Samir is very, very optimistic. He's saying it's going to be a bumper Diwali, and it'll probably help mitigate the tariff impact as well. But your thoughts on the way the GST cut will play out through the economy?
Yeah, I think there's going to be a big difference between growth on the ground and official GDP numbers. And I think that's going to keep the markets a little confused. My sense is growth on the ground for the FY26 fiscal year will be about 6.3%. But the official numbers, because of the deflator problems, could be closer to 7%. It could be like 6.8% or so. And I think we have to live with this at this point of time, that there are going to be two vastly differing numbers and two vastly differing sentiments around GDP in the economy. In terms of how growth growth feels in the next couple of months, I'm going to agree with Samir that July and August looked pretty good. So we were good on the eve of the 50% tariff. But I think September is going to be very weak, not only because new export orders are likely to fall, but also we're going to see some of the postponement of GST purchases. Beyond that, some of the fiscal spending may also come off because a lot of state governments have front-loaded spending. So I would say that we could see some softness on the ground for several reasons in the next couple of months. Will GST help? On the margin, it could. But there's one thing I'm going to look out very closely. Is it going to be revenue neutral or not? Because if it's not going to be revenue neutral, it means that rate cuts in some items will be compensated by rate hikes in some other items. And then we have to be very careful. Is the net impact going to be positive or not? So we'll wait for this in the next couple of days. I think there are important GST meetings. But for me, the one thing to watch out is it revenue neutral or not?
Oh, very extremely valid point out there, Pranchal. So we'll have to keep an eye out with regard to clarity on that. But final question to you, Pranchal, before we let you go. What about the Indian rupee? Post the S&P upgrade, one would have expected, some kind of cooling off in the yields, bond yields. That hasn't really happened. The rupee as well has slipped. What's the trajectory? Because money market is the lead indicator, right? And, that was looking a little bit weakish. So what levels are you working with out there?
Well, look, at the end of the day, if you have exports to the US falling quite a bit, the trade deficit will widen. And we're already seeing that capital inflows have not been very strong. We have net FDI, which is not growing at a particularly impressive rate, and portfolio inflows are uncertain. So all of this, makes it very uncertain on how the rupee might behave, going ahead. So I think we'll have to work with the weakness that we are seeing at this point of time. In terms of bond yields, look, my sense is that if fiscal can broadly remain in check, if GST is broadly revenue neutral, inflation is low, I think RBI is going to cut more. The sentiment should overall turn positive at this point, at some point, but it's not now. Right now, I think there's this big risk aversion across all asset classes, which is dragging down, everything, equity markets, the rupee, and rates. But I think once the dust settles, I would imagine some parts of the bond yield will start looking attractive again.
All right, Pranjul, Samir, we will continue this conversation and continue to ask you as things develop, right? I mean, as both of you agree, the impact of these tariffs, of course, will take some time to show up, but show up they will, unless, of course, something gets worked out very, very quickly, and at least these additional 25% tariffs go away. Thanks, both of you, for being here on the program. We'll come back with Jairam Sampath of Keynes Technology. He'll be with us to discuss demand trends and their F526 outlook. Stay tuned. Coming up.
Welcome back. It's actually a pretty decent morning. I mean, these days when you get a nice 0.5% upward drift on the index, 100 points up, it's nice and steady, looks good. Actually, the mid-cap screen is looking even better. Look at the mid-cap index. It's up almost 1.5% now, and we have a very positive advance decline ratio as the day kicks off. Well over 2,000 stocks advancing. So it's a really, really good looking screen. I just want to pick out actually some names since there is momentum and some buoyancy building in the market. Look at a Garden Reach Shipbuilders, 5%. Ola Electric, which has been absolutely electrified in the last 1 month, stocks up 40% in the last 1 month. It's up another 7% this morning. That's Ola. You just saw Garden Reach Shipbuilders. Zydus Wellness on the back of that acquisition is still building on those gains, 4-5% up on Zydus. Rate gain, 5.5% up on rate gain as well. So there's plenty going on in the market, and the mid-cap screen is looking really good. Actually, on that note, let's bring in Vamakshi. She is watching out for power stocks specifically. Vamakshi, morning. What are you looking at?
Well, good morning, Subhi. Taking a look at Torrent Power, there is a note that came in from Morgan Stanley. They have an overweight call on this counter, target price of 1,444 rupees. And this is on the back of an LOA that the company won for almost 1,600 megawatt thermal plant in MP. They believe that the plant can generate an IRR of almost 15 to 17%, assuming a 70 to 30 debt equity ratio. They believe the capacity charge could range between 4.1 to 4.3 rupees per unit, and they have also highlighted that the balance sheet has enough headroom for growth with current net debt to EBITDA of 1.4 times and net debt to equity of 0.4 times. So they appear to be quite bullish on this particular counter. Let's also put the spotlight on CG Power because there is an initiating coverage note from Morgan Stanley. They've initiated coverage with a buy call, target price of 799, and they say that the company is among India's most diversified capital good players. They say that the company has a strong presence in manufacturing, ranging from motors. It also is a beneficiary of strong growth in power, which includes transformers as well as switchgears. And the company is also aiming to build capacity in critical sectors like semiconductors as well as railways. So what they're highlighting essentially is that the company is a very diversified capital good player. Other than that, they believe that the industrial business revenue is expected to grow between 14 to 15%. The power systems revenue could see EBITDA, a growth CAGR of almost 35%. And semiconductors, the peak asset turnover here could be 1.9 times by FY31. So they appear to be quite bullish on CG Power as well.
Okay, all right. Thanks a lot for that, Vamakshi. Well, as promised, let's move on to our next management, Kaynes Technology. That's the company on our radar. We're now joined by Mr. Jairam Sampath, the whole-time director and CFO of the company, who joins us on the show. The key focus points of this conversation will be basically three broad themes we're looking at. The AMX sector amid the India-China talks, India's semicon boom and the key players in the value chain, and the OSAT business outlook. That's going to be important. Well, Mr. Sampath, thanks a lot for joining in, sir. Let's focus on the OSAT business first. When will it be commercialized? I believe the facility is almost up and running, but revenues will start coming in from Q4. So could you confirm that? What kind of revenue recognition should we see from the OSAT facility in 26? That's only Q4, I think so. And in 27, what should it look like?
Yeah, so certainly significant revenues will happen in FY26. Already the pilot plant is up and running. We have in the process of producing samples and getting it approved and so on. So hopefully we'll be off the block first, if I'm not mistaken. And then, of course, there are two other clients lined up. So there are three major clients lined up: Alpha Omega Semiconductor, Fujitsu L&T, and also Infineon. And so we have our hands full right now for the next 2 years or so when we establish production for all these clients and some more. And so it's on schedule. Pilot plant is already ready. The main plant is also coming up. Maybe in a month's time, it will get outfitted with machinery and so on. So we hope to announce the shipments as soon as possible. So the first set of shipments will go for testing and all that. And commercial supplies will start in the Q4.
Yeah, that's what the company had indicated earlier as well, Mr. Sampath. So it's good to know that you're on track with those timelines. So that's the first headline, that commercial shipments of chips from your OSAT facility will start in Q4 of the current year. Yes. Some sense, sir, on what this may mean for the company's revenue. I understand it will take time to scale up, and these are only the pilot lines, I think, that are currently ready. Yeah. But how will this revenue, your semiconductor revenue, scale up from Q4 going into the next couple of quarters?
Yeah, so earlier we had put a small, let's say, structure to this revenue. We said we do about 1,500 crores by FY28. So we might increase beyond that too, because what will happen is that this year and FY27, we'll do bulk of the investments. And the first phase, which is legacy packaging, wire bonding and all of those things will probably be up and running, and we'll probably start working with some of the advanced packaging too. So by FY28, I think we should get significant number up, even beyond what we thought earlier. Earlier, we had set a target of about 1,500 crores. We might even exceed that in FY28 in semicon business alone. Yeah.
Okay, all right. So, recently Keynes, they've committed, I think, around 50 billion for the PCB project in Tamil Nadu. Could you tell us what is the plan out there?
Yeah.
Will it be if you're funded via the current QIP money, or, or is the company planning any fresh issue to fund this plan there in Tamil Nadu?
Yeah, let me just clarify that.
Yes,
so 1,400 crores, which is 14 billion rupee, already committed, and we have raised funds through QIP. It's
Yes.
funded, 65% of the cap is funded by state and central governments. So we have government order to that effect, and then the remaining we put in as equity and a little bit of transient debt. Then the remaining 3,600 odd crores is for a new project, which we have signed a non-binding agreement with the state government, and we are awaiting their government order on how much of, let's say, subsidies that they will provide. So we expect a similar, and if not more, maybe about 65-70% under the CMS plus the state government subsidy. And so the remaining portion of it, we think that the first set of investments that we have done will start yielding cash in a couple of years time frame. So some of it will be put from there. And so we don't think we will raise any further major quantum of funds though. And this project is for prepeg and copper-clad laminates, and it's at a different location. It also augments capacity of our PCB plant too. So it may take its own 2 to 3 years time frame beyond the 2 years that we require for the Chennai plant to come up. So yeah, so that's the actual status. So 3,400, maybe 65-70% through subsidies. The remaining we will generate from our PCB business, and also, if necessary, a small bridge loan also we might take.
Okay, got that point. So now we need to understand the implications of all the tariff changes and what's going on in terms of just global realignments, right? So let's start by understanding what you've told us earlier. You said that your exports could go up to 25% of the total revenue pie by FY27. Now, how much of that is going to be dependent on exports to the US market? And currently, I mean, because of that specific section, I think electronics is exempt. And I'm not sure if all categories of electronics, I think some categories are exempt. But tell us, are all your exports currently exempt from the tariff?
Yeah.
What happens if they come under the tariff?
Yeah, the HSN code 8541, I think broadly by and large where we operate is completely exempt from import tariffs there. But then we are talking about situation as announced now. So we think that the semiconductor exports will probably not be directly to the US, but they'll be more to their warehouses outside of India, like maybe Singapore, Hong Kong, and other places, maybe even Taiwan, etc. And similarly, PC board also will be PC board. Some of the exports will be probably to Europe and maybe Japan, and then bulk of it will come to India too. So we don't see any major disturbance due to this tariff structure. It is just that it is causing a bit of anxiety among the, let's say, investor community more than the production people. And what we hear on the ground is that people are now, they have put in place long-term measures to move alternative production, to create alternative production sites in India as compared to China. And these moves earlier, only the American companies are contemplating. Now it's European companies, Korean companies, and Japanese companies. This plus one has become a little, so I don't know whether it was intended or not, but the entire thing is benefiting us now.
But and exactly to round that up, a little short on time, maybe we'll have a longer conversation on this later. But on this China plus one, and now we are engaging with China. Now, as an electronics manufacturer and someone with large export aspirations as well, does that at all worry you? We don't know what shape and form eventually this bilateral, trade ties with China will take. But if India decides to open up in some way the electronics sector, I mean, I don't know, that would be a cause of concern for you, I believe.
Yeah. So what will happen is, see, this gives us a unique opportunity to take the best out of the Western markets, which are like revenues, and best out of China, which is like technology and inputs. So I think we've got to be cautious about what we do. But I think all in all, it is beneficial to have good supply side relationship with China and a good sales side relationship with the rest of the world,
Okay. All right. Very quickly, sir. FY28 and FY30, you had given some ballpark PAT guidance. Could you just reconfirm that? What is the outlook? Because currently you're doing just 400 crores of PAT. Market cap is close to around 40,000 crores. But the street believes this 300-400 crores of PAT can go up substantially. So for FY28 and 30, what is the number?
FY30, we said about $2 billion is the kind of number, and maybe about two-digit PAT at 11%. So 11% of 18,000 crores is what we think we'll hit at the minimum. Of course, we think that it might be north of that too.
So around 1,800 to 2,000 crores of PAT by FY30.
Minimum, yes.
Got it. All right. Thanks a lot, sir, for joining in and filling us in with all of those details. We look forward to having a chat with you and see how things are progressing on the OSAT front, on the PCB front, as well as on the core EMS business. That said, well, let's get back to the technicals of the market. Nagraj Sethi is back with us. Hi, Nagraj. Good to see you in. Good start to trade, at least today. Markets are holding with gains. What are the levels you are looking at, and what's the fresh trade?
Hi, good morning, Nigel. Yes, the market has bounced back after a few sessions of decline, but still, I think markets are not out of woods. Though this bounce back could face strong resistance around 24,700 levels. If Nifty sustains about 24,700, then one may expect some more upside towards the near term. I think there is a possibility of Nifty bouncing, rebounding from the highs towards the support of around 24,200 to 300 levels, which is a strong cluster support with regards to a previous swing lows, 200-day EMA, as well as the previous gap area of May 25. So in terms of stocks, I have a couple of stocks on both sides. One is from a short end, one is from a long side. From a long side, granules, the chartically granules has bounced back very well recently in the last couple of sessions after a consolidation. Currently moved above the 200-day EMA hurdle. Right now trading around 514.5. One can look to buy at this point of time. The upside target would be around 545. One can place a stop loss at 499. Second one is from a short side. OMCs, especially BPCL, was showing some.
Oopsie. Okay, all right. I think, that line snapped out there, but BPCL is the one that Nagraj wanted to talk about. We'll try to get him back for the time being, slip into a short break, come back, continue to focus on markets. Stay with us.
Welcome back. So the equity market is having a good morning currently, 100 points up on the Nifty. Let's find out what's buzzing in commodities. Manisha is here with us. Manisha, what's capturing your imagination this Monday?
Well, there's nothing left to imagination really with the kind of gains that we've seen, especially coming for the precious metal prices. I mean, you have to take a look on the kind of run-up that we've seen in both of these. So gold is just very close to that $3,500 an ounce mark, which is an all-time high that the gold prices saw in the month of April. For the Indian markets, we're trading at an all-time high at around 1,05,000 rupees per 10 grams. So it has been a one-way rally that we've seen happen in case of 2025. And it's not just about gold. Take a look at silver prices. 2% of gains in Asia right now. And we've crossed above that very important psychological mark of $40 an ounce. For the Indian markets, it yet again is an all-time highs for the silver prices also. That is because rupee has continued to decline. 3% down in this year, a worst Asian performing currency, and that has led the Asian prices or the Indian prices quite on the higher side. This is what we've done in sense of gold prices in the last many years, and I've taken a 5-year gap as I put this chart across for you. In 2005, you had gold prices trading at around 7,700 rupees. This is per 10 grams. And then we've seen prices continue to gain very, very strongly. Last year, we were trading at around 75,000 rupees. This was the price that you saw in the markets there. But this year, we are trading at 1,05,000 rupees. 2020, the prices were at 50,000. And as you can see, between 2010 and 2015, the gold prices did not move so much. It was a year of consolidation in those 4 or 5 years. But then 2015 to 20 to 25, it has been doubling every 5 years when you look at the gold prices therein. Take a look at that in sense of percentage terms as well. In the last 5 years, we've seen prices decline only once, and that was in 2021. And the kind of gains that we're looking at in sense of gold in 2025, gold clearly has been the best performer in last 5 years in that sense. So 2025 really going forward as the best in 5 years in case of gold there. The last 4 years have given you very strong returns continuing. 2024 was strong gains as well. But this is the year that we've seen string of all-time highs starting from the month of Jan itself. And it's not just about gold. Take a look at the silver prices. We've seen very strong gains come in for this one as well. And as you can see, it has been doubling up every 5 years since 2015, same as the way gold has done. We were trading at around 33,000 in 2015. That was 10 years ago. 2020 was 68,000 rupees, and currently we are trading at 1,23,000 rupees a kg. It has been very strong gains that you can see in case of silver as well. This is what we've done in sense of percentage terms, and silver, this is the best performing year in last 7 years when you look at silver as well. The negative day return was in 2021, but then as you can see, since 2022, it has been a string of positives, and 40% of gains is what silver has given you in 2025 till time. We still have 3 or 4 months to go, but silver price is clearly on fire here. Well, the major reason for this is, one, you have expectations of a US Fed rate cut in the month of September. There is decline in the US dollar index. The markets are looking at a lot of uncertainty, and there is some safe haven buying because of that as well. So while the US court has ruled Trump's global tariffs illegal, but it's been kept until October 14th. So that is something that the street will watch out for. And then when you look at the gold and silver ratio, that has been supportive. The US inflation data has boosted expectations of a Fed rate cut at least twice in this year. That clearly has been supportive. And the way the markets are slowing down, the economic data has been on the weaker side, not just in China, but in US as well, has been supportive as well. And then the markets have seen very strong investment demand, whether it comes in from central banks, from retail, in the digital front, ETF buying in gold and silver, all of that has seen net inflows. The street does expect that going forward from here as well, you could be looking at higher highs as the market is just about broken a very, very strong psychological levels on the higher side.
Well, Manisha, looking at your historic charts, it just tells me our grandmothers were perhaps the best fund managers, weren't they? Really, they've been proven right and how. All right, with that, we have to take a very quick break, but coming up, our special segment, It's the Economy. Lata today speaks with Ashish Vaidya of DBS Bank and Mitul Kotecha of Barclays as the rupee hit a new all-time low versus the dollar last week.
Welcome to It's the Economy. The rupee touched a fresh all-time low of 88.30 per dollar on Friday and continues around that range this week as well. The rupee has seen the highest fall among all EM currencies versus the dollar in calendar 2025 and in August as well. For the year, it has fallen 2.5%, while most Asian currencies have actually risen versus the dollar, which in turn is because the dollar index itself has fallen this year from 106 to 97 levels. The rupee has also been depreciating against the yuan. It's at its lowest level against the yuan as well. So is this entire depreciation of the currency partly being blessed by the Reserve Bank to help exporters who are facing high tariffs? Or, is this something because of FII flows? And where is the rupee headed from here? For all these questions, I am joined by Ashish Vaidya, the Managing Director and Treasurer, Global Financial Markets at DBS Bank, India, and Mithul Kotecha, Head of FX and EM Macro Strategy Asia at Barclays. Ashish and Mithul, thank you very much indeed for your time. Ashish, first up to you. This fall, first let us see where we are headed from here. What is the sense you are getting now that 88 is crossed? Will 89 look easy in 2025 itself?
So let me start with the fact that, it's a well-known fact that, whatever is happening to the rupee is basically because of the Trump tariffs situation we are seeing in India. And some bit of it has already been sort of discounted. Having said that, now, technically speaking, I think the support for the rupee is somewhere about 87.80 to 87.90 in the near term. And on the higher side, top side, I would think that the rupee has a potential to go to about 89 or 90 levels, depending upon obviously the news profile that comes in. Very important to actually, the situation right now is very, very dynamic. You've got to look at probably somewhat like a 4-pillar approach to look at how the dollar rupee will trend. Basically, the announcement that can be made by chiefs of the countries in the various media platforms. Second would be the views and the stand that the central bank takes. The third could be the economic policies and reforms, like we've seen the GST reforms sort of being talked about in India, and probably in the near future we're going to see that. And obviously the actual data that gets published. So broadly, from a medium term or from a day-to-day term also, these announcements will make a lot of difference. So it's really about day-to-day. But technically speaking, like I mentioned, about 87, 80, 90 levels on the lower side, but to an extent it could be 89 or even 90 on the higher side, depending on how worse the news gets.
Okay. Well, Mithul, to come to you, isn't the worst priced in? I mean, it's almost an embargo in terms of exports to the US, and nothing else pretty much has changed. The global GDP numbers are not getting recalculated anytime soon. So would you say this is the worst, or do you think there is further depreciation, further sharp depreciation?
Yeah, look, I think I think a lot is in the price. I would agree with that. I think, when we look at the levels that we're at now, the rupee is cheap. It's cheap on a rear basis. It's cheap on a near basis. And cheap from spot perspective compared to its peers. And so I don't think now incremental weakness from here is going to do that much in terms of exports performance. There is a real risk that the more the rupee weakens, you're going to increase the oil import bill at a time when pressure is there to actually reduce imports of Russian oil. So I don't think there's a lot of value in further weakness. The big question at the moment is when and if RBI will step in, at what levels. It's very hard to catch a falling knife here. So it's hard for me to say, look, this is done for now. But I do think that we were amongst the most bearish on the rupee earlier this year. But it's actually gone through even our end year forecast for dollar INR. So you can see how quickly this move has happened. We'd been forecasting a move through 89 into next year. So I don't think here that there's a lot more weakness to be had. I do think it's oversold. We've been saying that. Obviously, the 50% tariff was worse news. But again, I think a lot is in the price. I think if the RBI comes in, that's going to be important. FPI flows are quite negative, and especially on the equity side, bond flows are certainly more positive. And that is adding as well to the weakness of the rupee. So like I say, I wouldn't want to call a bottom here, but it does look technically and fundamentally oversold at these levels at above 88.
Okay, I was actually even coming around to the same point. Ashish, the current account deficit has been revised higher, the forecast for the current year by many economists because of the tariff. Assuming our exports to the US fall by, $20-30 billion, the current account deficit has been increased. The forecast has gone up from about 0.7 of GDP to about 1.2% of GDP by most economists whom I polled. But that is, all of $50 billion. Our reserves are $640 billion. So would you agree with Mithul that immediately perhaps the worst is priced in? Or would you say that, 89 is like in the near term?
No, so I completely agree on a fundamental basis. I think India is sort of well poised. You look at the GDP, you look at the local growth numbers, everything is looking positive. But having said that, markets and traders have a tendency to overshoot, right? And that's where I'm saying that. And typically, when you see outbursts of rupee, it's probably in the range of about 2 to 3% kind of moves, and then it sort of settles down. So I'm just looking from a pure technical sense. Fundamentally, I simply have no disconnect with that rupee is extremely cheap. And I think eventually we, as things stabilize, we will surely get into the appreciating bias, because the growth inflation dynamics of India versus the rest of the world is actually improved substantially. So on a fundamental stack, I'm completely with both yourself as well as Mithul. But in the short term, I really think that what if next the European Union announces an embargo on India exports and all that kind of stuff. So we really don't know how things, and one tweet or one news in the media can change the entire sentiment. It could be 87 the next day. It could be actually 89, 90 the next day. That's where I'm really coming from.
Okay, no, fair point. Mithul, what's the view on the dollar itself? Is not the dollar also expected to weaken, and therefore would not that put a floor to rupee depreciation?
Well, I think the dollar has already weakened a lot as well. And if you look what's happened to the dollar this month, it's been heavily sold. Whether it's to do with actually, everyone thought tariffs would be positive for the dollar. It clearly wasn't. There has been outflows earlier in the year. But again, from our perspective, a lot of the dollar selling has already taken place. It's similar, we would not want to call a bottom at this point, and maybe in the next few weeks, you might still see some of that pressure linger. One of the biggest focuses for us from a dollar perspective is really what happens with the Fed and Fed credibility, and whether President Trump has his way in terms of actually removing Governor Cook, whether and how quickly he can get his nominee Miran into place. Don't forget there's already 2 nominees in the Fed board. So there is a lot of focus on the Fed, and I think investors would take fright at a potentially significant hit to Fed credibility. That said, from a rate pricing perspective, we've already got pretty much 2 rate cuts priced this year. We would agree with that. So for now, notwithstanding any knocks to credibility of the Fed, we think a lot of the dollar selling is already behind us. So from a point of view of dollar rupee, on the margin, you would argue if the dollar flat lines or is slightly firmer in the next few months, that doesn't bode well for the rupee. But like I said, a lot's in the price. I do agree that it's now depending on a day-to-day, it's a news flow, it's what tweets are going to see. All of this is important if we see more tariffs, but there's also an equal chance that 50% is not going to be remaining in place on tariffs on India, that we could end up seeing much reduced tariffs eventually, especially if there are going to be eventually talks between Trump and Modi and there's some progress on discussion. So I wouldn't necessarily say this is the end of story in tariffs.
Okay. Oh, yes, most economists are not penciling in a full year 50% tariff. They are hoping, expecting that it may be only for a few weeks or months. Ashish, the rupee is also depreciating versus the renminbi at 12.32 or 37 at this point in time. It's only once before touched that number in 2021 when China was in the throes of very severe COVID. Otherwise, we are at the lowest in terms of rupee yuan as well. Therefore, do you think that there is a bit of a blessing from the authorities that a depreciated rupee will help exporters when other things are against them?
No, absolutely. We don't know really whether that's in the mind of the authorities. But having said that, I think I completely agree. The CNH has actually depreciated in the last 3 months, roughly about 4.3% versus the INR. The euro has actually, the INR has depreciated 5.5%. And against the USD, the INR has depreciated only 3.2%. So broadly, from an export balance point of view, it really helps the exporters. But I think there is more to this. We really have to watch out. And in fact, even if you look at the trade balance, we had a deficit of about 27 billion. And with an average of about 5.5% depreciation, the imports become more expensive. So the gap actually moves in to 33 billion. That is without the Trump tariff impact. So with the Trump tariff impact, the things could get a little bit more worse. I'm not being an advocate of a complete doomsday, but what I'm saying is if this scenario continues for some few more days or weeks, the impatience in the market will only grow. And looking at how the equity markets outflow we have been seeing on a consistent basis, all designed towards pressurizing India into a very weak spot. I think we need to be very careful, and I don't want to call it a top or a bottom, but I think broadly we are in a very volatile range.
Okay, just a final question to you, Mithul. The Indian yields are actually rising for a whole host of reasons. There is a bio strike here, but a stronger than expected GDP number has also removed any expectations or some expectations of a rate cut on September 30th when the next monetary policy meeting happens. Will that also put a floor to the rupee's fall? The fact that, rate cuts are now perhaps off the table.
It could do. Look, India still offers decent yield. And from an Asia perspective, it has one of the best carry advantages. So I would, if markets are now paring back, easing expectations, then that clearly helps. That said, look, even if there's one cut, we still expect, our house view is one more cut from RBI in October. We're not, we still think there's a risk for the RBI cuts. We actually think there's actually scope for at least swaps to move lower, even if bonds have been selling off. You're right, there's concerns. Obviously, GST rationalization could also raise a little bit more on the fiscal side of concerns. We think that's overdone as well. We're not that worried. Obviously, there is a bit of a bias strike. The strong GDP didn't help on that front. It just shows you the economy is still doing well and would probably be able to withstand the impact of tariffs quite effectively without any massive knock-on impact on growth. So, there is that pressure in the near term. But look, we also think bond markets look like they're oversold here. We still think there's potential for a rate cut, even if it's not as much as perhaps a week ago. And in that sense, but look, one more 25 basis point cut, India will still offer decent carry. And again, that will be a factor that eventually puts a floor on the rupee weakness.
Okay. Well, thank you very much. Both of you saying that perhaps a lot of the fall is done, but we still remain vulnerable to the odd tweet and the odd hot-headed decisions. But otherwise, perhaps most of the bad news is in the